What's going on, guys? This is Dave with another Discord meeting. If you want to be a part of these Discord meetings, hit that describe button, click the link tree, and sure enough, my name will pop up with the Facebook, with the Discord, with the YouTube, with the everything, Instagram, TikTok. Yeah, I'm a boomer, maybe, but we know how to do it, baby. Actually, we got a young guy named Covey. Shout out to you, Covey, on our squad that's taking care of all of this. Now, we got plenty of people in the Discord right now in the meeting. You guys know the drill. If you got something to say, unmute yourself and ask away. Don't worry about interrupting me because I hate the dead silence. Actually, I somewhat fear that dead silence. So if you want to, just unmute yourself, interrupt me so we can chickadee chat about whatever the hell is going on. We are here for risk management. I said that I would do a very nice talk. What are we calling these? A master class? I don't like calling it a master class, but I don't know what else the hell to call it. A deeper dive, if you will, into risk management. So let me just show you my Dell trade. We're going to start with a loser because remember, you are a loser unless you're learning, guys. And we want to learn from my Dell trade. Now, in all honesty, when we look at this Dell trade, I played it absolutely perfect. But we need to start with this loss so you guys understand why and where I took this and why I totally can accept this loss. Okay? First and foremost, the reason why I'm happy with this loss is because I didn't day trade for one. I played my strategy for two. And three, I know that this strategy that I play is back tested by data, and it shows that, sure, my win rate's only 30%, but my wins are much bigger than my losses. So if we play heads or tails, and I say heads, you win $20, but tails, you lose $5, that's a 1 to 4 win to loss ratio. 5, 10, 15, 20. Just want to make sure my math is right there. 1 to 4. That's a 1 to 4 risk-reward ratio, meaning 1 is your R multiple of 1, and then tails would be your 4R multiple, right? How many times are you going to flip that coin? I'm going to give you the answer right here, right now. As many possible times as I will let you flip that coin. Why? Because if you have a 50% chance of winning, 50% chance you lose 1R, but the other 50% chance you win 4R. Now, even if I told you you will win, let's say, $100 if it lands on heads, but you only have a 75% chance, or you have a 75% chance of actually hitting tails, and you're going to lose $5 or $10. Let's say $10, okay? You still have better odds, even though your losing rate is much, much higher, because when you win, you actually erase all those losses. Here's the catch. If you're not disciplined and you start day trading, or you're not disciplined and you start playing somebody else's strategy, or you're not disciplined and you don't set your stop losses, hence risk management, then you will lose more than you are going to win, and you're going to take bigger losses. So, back to the point at hand. Risk management is pinnacle. It is an edge in trading. If you learn risk management, you can base your whole strategy off of that. Okay, is everybody with me here? Does everybody understand what I'm saying here? Any questions on that? Okay, so you can have a losing win rate, meaning your win rate is only 30%. Now, a lot of people would say, well, if you're only winning 30%, well, how are you going to win? Or how are you going to make money? It's that simple, guys. Your wins have to be much bigger than your losses. That's why we're at least shooting for 4R minimum. 4R minimum. Actually, Christian Quilamagi, one of the great people that we have learned from many, many times on this show, go back and watch some of those videos, will tell you that we're only shooting for 10x. We're not getting into anything unless it is 10x, okay? So let's go ahead and bring up Dell. Now, I lost on Dell, and we're going to start with Dell, and Dell is still a play here. If you guys remember, I drew out the the moon and everything. I don't know if it's on Dell or not, but we'll get rid of that. So check this out, guys. When this came up and my alert went off for Dell, because Dell showed a big trend line. And if you guys aren't aware of what we play, it's trend breaks and base breakouts. You can go to that the swing trading school and you can watch exactly how we do this. Okay? This is a daily trend. The average daily range is above 4%. It's above 4%, meaning it's fast. Also, the relative strength in Dell is 98%. We want it above 90. So now we know we're in a relatively strong stock, and we know the average daily range is much faster than your big boats like Amazon and Tesla and all those good stuff. Actually, Tesla's faster. Like Meta, like Google, the bigger boats that move too slow. We want to be in faster movers. Dell's a big boat, but it still moves pretty fast. So we know we have what we want. Our strategy is in front of us, and we are happy to play this trend break strategy. And sure enough, it breaks the trend here. So I zoom in on the 5-minute time chart. And when I see it breaks this area on volume, note, here's the thing. When it breaks on volume, I say it's time to accept some risk. It's time to get into this, okay? Now, Covey alluded to the simple fact that yesterday we had a lot of false breakouts. This is another false breakout, okay? We had a lot of breakouts that worked out too, but we have been starting to see a lot more false breakouts. That's upstairs now. So now my risk is starting to reduce. Just like on this trade, I risked much smaller, okay? I only risked 247. So I was 50 shares shy of my full risk. So I only lost $250 on this rather than 300. Tomorrow, if I continue to see more false breakouts, guess what? I'm lowering my risk to $200. I'm not going to sit here and play this false breakout game. So it's just something that I put in my head. Now here's the risk management on this trade. When I decided I wanted to take this trade, I seen on the first 5 minutes here, I wanted to play the 5-minute breakout because the volume showed me I want to be in on this, and it broke my trend line. Now I want in. So I need to find a proper area to risk from. So when I looked at this trade, I measured the average daily range, knowing that this trade is 4.8% ADR. Where do we find the ADR? Well, on this is our trader view. If you guys don't have trader view, Dan Bob will post that in the link tree in the comment section right now. So you guys can see it if you're watching it at a later time, and he will also post it in the general chat. If you'd be so kind, Dan Bob, post the trader view in the general chat of our Discord, and you guys can download that for absolutely nothing, or click the description down below. When you click the description, click my link tree, and our trader view will be in there, or you can join our Discord and check it out in the resources. But you'll click that link and you'll get $15 off if you decide to upgrade to the Essential Plan. Regardless, Covey teaches you how to set this up. Right here is the average daily range percentage. It's in the indicators, and you just look for ADR percentage Amer Schulucker, okay? Once you get this up and running, the average daily percentage needs to be over 4%, and your RS rating needs to be above 90%, okay? So now that I know that we're in the right thing and we're breaking up above and we're at 4.8%, we go back and measure this 5-minute candle, okay? We're taking the high and the low because this is where it's going to break out. This is where I expect to take my buy or take a bid. So I grab it here and I pull it down, and I'm measuring the length of this. Right here, it shows 1.63%. My risk is now lower. I'm sorry, it is now within that 4.8% average daily range. So this may have gotten a little confusing. I want to just sum this up really quick before we carry on, guys, and then I'm going to ask for any questions. I'm taking a bid on this trade because it broke out on the daily trend line. That being said, I've accepted the fact that I want to be in this trade. So I need to ensure that where I am going to risk, which in my strategy is the low of the day, okay? Because it's the low of the day, I want to make sure that that is a proper risk to take, because if this stock moves 4.8% in one day, I want to make sure my risk is within 4.8%. Because if it's above 4.8% and I get into this stock, then I might be holding onto the stock for a very long time before it gives me an answer. I am a trend breakout strategist, meaning when I get in a trade, I'm expecting this trade to have momentum to the north side. If it doesn't, I want to be out of that trade immediately. So that's why we measure the 4.8%. We understand it's 4.8%, and we want to be within that 4.8% for our risk. So I got in this trade and I use this as my stop loss, and I know it's within that average daily range percentage. Now we have to figure out how many shares we want to take, okay? Before we go on to that, is there any questions though, guys? Because I know it can be very confusing at first. Is there any questions on the average daily range risk multiples? Don't be shy. If you have questions,
You're using low a day as your stop loss.
yes, sir. In this instance, I'm using low of day. Now, a lot of people like to use previous low, but here's my issue with previous low on this trade. If this is the breakout here and I measure to the previous low, you can see it's at 6.56%. So I can't use previous low of day because it's higher than the average daily range. Meaning if I would have taken this here, well, I have all this room to come all the way back down, and then it might stop me out down here and then bounce off this area and then come all the way back up. So it's going to take too long. I'm not going to make a lot of money if my 1R is this big of a range, okay? So I need to make sure that risk multiple, so I use the low of today. It's within that average daily range percentage, and not only that, but I'm expecting this thing to break out today. Not tomorrow. It might break out tomorrow, and I'll be there to take it again. But I'm expecting this to break out today. So if I am wrong, then that's okay. I want to know today if I'm wrong or not. And today I found out that I was dead wrong. Okay. Now, does that answer your question, Bob?
Yes, sir.
Yeah, I guess, Bob, my bad. I guess all Bob asked was your stop low of day? Yes, it's the low of today. But I do want everybody to understand that a lot of times we'll take low of previous day to have a wider stop, okay? That is discretional. You guys can use wherever you want, but you need to know where it is at. Not, oh, well, somewhere below 146, maybe 145.50, I don't know, but below 146. I'll check on it later and come back and see. F that. That's not me. That's not the way I teach. That's not what I preach here. Hard stops. You either know if you're right or you're wrong. If you're a momentum trader, you need to know whether you are right or whether you are wrong, okay? If you guys are just joining us in the Discord, welcome. Thank you guys so much. I see Kilgore in here, Lee. I see Travel's with us. Predator, what's going on, bro? Good to see you. If you guys have any questions, just shout out. I want to make sure everybody understands this risk management stuff. It's very, very pinnacle to trading, okay? So now
I got an exception question.
What's that, Predator?
I got an exception question.
Go ahead.
Both for anyone here, but as well as myself, because it was something I did. On one of my successful trades, the actual previous 2 or 3 days was actually inside of the ADR range.
Mm-hmm.
The days were very close on the closure, so I took a stop loss that was 4 days out, but it was still just at the very edge of my ADR range.
Okay.
Would that have been unacceptable? It
Well-
worked out for me, but I'm curious.
Well, so when it comes to that, if it's within the ADR percentage, that's great. I'm happy with it. That you did what's right. The real question is it part of your process? If you followed your rules and your process and you're still playing that strategy, then I cannot argue with you. I'm saying this is part of my process. I have to keep it. So if your average daily range percentage is 2 or 3 days behind, sure, that's fine. You can put your stop loss wherever you want. My expectancy is you would want it with your average daily range percentage to be within that, right? So if your stop loss is within it, I don't care where you put it as long as it's within it, right? Now, if you can get that average, so like me in this case, it was only 1.3% from top to bottom. So that's a very tight stop, which means in one day I can achieve 3x risk multiple, right? Because if this moves over 4%, 4.8%, I can make almost 5R in one day off this. So instead of risking all the way down here, which is the full 4.8%, and my 1R is only 1.3%, that means on average, the average daily range on this, if I actually catch this breakout to the north side, I could actually earn 4R to 5R each day on my trade if I am right. You see what I'm saying? So if I'm only risking 1R, let's call it $100. If I'm only risking 1R and it stops me out, hey, I lost $100. But if this trade did work out, if this breakout did work out, this 1R could be 5R tomorrow if I did not stop out. Meaning instead of losing that $100, tomorrow I could be up $500. The next day, if it's continuing, I could be up $1,000. You see what I mean? So if I'm only risking 100 and and my average daily range is within that range, I could be up 5R the next day, which is huge, guys. It's huge. So that's why we're trying to understand this risk multiple. So no, I don't think it's wrong for you to do, as long as it's within your rules and within your strategy and within that average daily range percentage, to answer your question. Okay?
So you're measuring from where the breakout line is, which the green line there,
Where I decided to get in because of the volume, yes, the green line.
Okay. To low of day.
Yes, which at the time, this was the low of the day. Okay? So I seen this open up. I seen this huge volume come in. And if you look back, and we measure this volume, I'll just bring this up. That volume right here was the highest volume we've seen traded aside from this day. That's the highest volume that we have seen traded on this stock in over 2 weeks. So I decided, hey, if we're going to get a breakout on this, this volume might be enough to overwhelm the sellers here and have a continuation higher. Okay? Now, this is actually, we don't want to get too far from this. We just need to understand the risk management behind this, okay? If you want to learn how to play the trend or base breakout strategies, you got to watch those videos. But this is going to be solely on risk management. Just understand, I wanted to take this trade for more reasons than one, okay? It was in my strategy. I see volume coming in, yada, yada, yada. But now I want to take this trade. So first and foremost, it's within the average daily range, that 4.8% that you can see right here, okay? Because it's within that 4.8%, I need to make sure, we want to make sure we're within that 4.8%. This is 1.66 from where I wanted to get into the low of the day, because that's where I'm risking, okay? So because it's within that range, now I can take shares, okay? Now, I'm allowed to take 1% of my account, okay? 1% of my account. Let's just say you're using, to make this very, very easy, let's just say you only have a $10,000 account. Or let's just say you only have a $1,000 account. 1% of 1,000 is $10. Is 1% of 1,000 is $100. All right. Am I saying that right?
No. $10.
I'm sorry. Say it again, Dan.
$10, right?
$10. Yeah. So yeah, because 33,000 would be 330. Yeah. Okay. I'm sorry. I'm I'm trying to erase too many zeros. So let's just do 10,000 because I'm not used to using the $1,000 marker. So say you have an account of $10,000, you can risk $100. Okay. So let's say you have $10,000 in your account. You're allowed to risk up to $100 of that. That is 1% of your account. That's the maximum that I want to see anybody ever using when you're first starting out, right? And that's just personal. That's not financial information. I'm just saying for me, okay? Let's put it that way. For me, I will never risk more than 1% of my account if I were starting. That would be the absolute maximum amount. I use 0.01% of the account that I had at the time, okay? And it was still meaningful to me. So make sure you're not sweating beads over this, okay? And thank you, Dan Bob, for correcting me. So here we are. We're at 148.33, and I know this is my low of the day. This is where I am going to stop out, okay? Let me bring up the calculator now. Now, Dan Bob will post. He will give you, and if you guys want, you can join our Discord. And we have plenty of calculators that can do this for you. But I want you to see the process. I want you guys to actually see how this works, okay? So if we're going to get in at this green line, that's 148.34. 148.34. Okay, that's where the shares are when we want to take this trade. 148.34. That's the price of these shares. Where is my stop loss? Well, my stop loss, it will get me out at 145.90. So now I'm going to subtract 145.90 from the buy area of 148.34. that is going to give us 2.44. That's $2.44. What does this number represent? If I'm subtracting my stop loss from my bid or from my buy area, that is giving me 1 share's price. That means it's going to cost me $2.44 every share that I buy. So if I bought 1 share of this when it breaks out here, okay, and I get in right here at 148.34, and it breaks down and it stops me out, I'm going to lose $2.44. Now, all you have to do is multiply that. That is how many shares you're going to get, okay? I'm gonna say it one more time so you guys understand. If I buy in at 148.34 and my stop loss that we've all agreed on is 145.90, if we subtract the 2, you're going to get your share price for 1 share is $2.44. Then all you have to do is multiply that, okay? When you multiply that, that's how many shares you can take. So if you're only going to risk $100, excuse me for my bad math, and you guys will find out I'm not that smart. But if we take 244 and we multiply that by, let's say, 43 shares, I was pretty damn close, right? I was pretty damn close. It's $104 or $105 here, okay? So we could take 2 shares less than that. So we'll take at 244, let's multiply that by 40. Now we know that we're getting close to that $100 risk area. So with a $10,000 account, we're allowed to risk 100 shares, or we're allowed to risk $100. So we're allowed to take 40 shares, because 40 shares multiplied by $2.44 is $97.60. You don't need to get this spot on. You need to be within a couple of dollars of that $100, okay? Now, before I move on, because I'm going to do this in another example so we get the hang of it, but do you guys understand this? Or is there any very key points that maybe I'm missing out on? Any questions, guys?
Hey, Dave, can you repeat that again, please? Sorry, just one more time. I can write it down.
Absolutely. I will repeat it all one more time. We're actually going to do this on another stock, okay? Let's do this on another stock. Let's do this on an easier stock. Let's do this on... well, what's one I took today? MAIA. All right, so check it out, guys. Right here's a base breakout, okay? Or I'm sorry, a trend breakout. Here's the hourly, so you can see it a little cleaner. Here's the trend down here, and then my strategy is a breakout on higher volume. Of course, you want to see this on the daily. It's holding the 50-day moving average. This is a little bit more advanced, but we had a undercut and rally the day before, and because that undercut and rally came on higher volume, I was expecting to see a breakout, and sure enough, first thing in the morning, we started to get that breakout, okay? Let me look at my trades really quick. MAIA, I bought 1,000 at 366. I just want to make sure I got the right price. So let me mark this 366 so that way we can understand exactly what's going on here. We'll put it on the 5 minutes so it doesn't look so shitty. All right. 366. Okay, so this stock, I took a look at it because it breaks out of its trend line here, okay? I created this trend line. I seen it's all within my strategy. We're going to stick to the rules here. So now here we have a stock, and where I want to buy it is 366. Well, I need to use this low of day as my stop loss, right? Because I want the best price that I can, and if it doesn't carry on, then I don't want to be a part of it, okay? So look, right here is 366. And then this is the low of the day, 354. So we bring up our calculator and we say, well, we want to get in at 366. So we do $3.66, which is the share price, muley. And we're going to use the stop loss, which is the low of day, and that's 355. So we're going to subtract $3.55. That equals 11 cents. Well, if we multiply 1,000 shares by 11 cents, you'll see my risk here is $110. If you have a $10,000 share account, you're within your risk. You can take 1,000 shares there. That's simple, guys. So if this stock comes up and then starts to break back down and it stops you out, you're going to lose $110. Now, Dave, you might be saying, why are we continually talking about losses? Because we are managing our capital. One of the only things that you can do in this world of investing is choose what stock you want to be in and choose where your stop loss is. The stock market does not give a shit what you think about the stock. You might think the PE ratio is great, or the company is great, or the CEO is making impressive moves. Nobody cares. Nobody gives a shit what you think about the stock. The only thing that you can control is what you buy, how many shares you buy in, and where your stop loss is. Risk management is an edge, people, so you really need to learn and understand risk management, okay? So, again, our buy-in area is 366. Our stop is 355. If you subtract the price you need to buy from and then your stop loss, you will get the share amount for one single share. If you understand how much one single share costs, you will understand if you multiply that, that is what your risk will be when you stop out. Okay? Does everybody understand this? We're going to do it one more time. We're going to do it one more time, and then we'll go over we'll go over any questions. So if you guys have any questions, feel free to bring them up. And listen, I understand how hard this is. Again, guys, I am not good at math. I am probably the worst here at math. If you think you're bad at math, you're not. I'm bad at math. But I had to learn this because I knew for an absolute fact that I'm so bad at math, I could easily completely screw my own account because of this, because of me not understanding these simple multiple risks. And I would just completely add too many shares, which I've done. Guys, even knowing how to do risk management, I still have messed up the numbers. Just as you've seen, I had to ask Dan Bob, what 1% of 1,000 is. You know what I mean? It's $10, right? Well, I'm used to using the double digits. I'm not used to risking that $10. But if you're not used to trading or risk management, maybe you should risk $10. Do so it's not so meaningful, or paper trade. So you're not even risking those money until you understand risk management. Okay? Now, I'm not afraid to tell anybody I'm not good at math, but I learned this. And if I can learn this, you can learn this too. And it's very, very important. Now let's look at NVIDIA. Now, since I've been telling you guys so much about losses, my ego wants to tell me, hey, look at me. On this trade, we're up $200 today, $431 so far on this trade. But keep in mind, I've already sold half of my shares, okay? So I may have flunked out on the first one I showed you, which was Dell. Okay, I'm up a little bit in MAIA. Now here is a beautiful trade that I took that's still paying me. Okay, so let's take a look at the numbers. I'm just going to go ahead and blow this up so you guys can see it. Here is my strategy. We get a big move down, a big pop up. Now it holds new higher lows. What do I mean by that? Here's a low. Here's a new higher low. Here's a new higher low on a descending trend line and an ascending trend line. I only need the descending trend line. When it breaks out, I see when it breaks out, we're getting a lot of volume on the breakout, much higher than the previous day and much higher than the average, okay? Now, when I zoom in on this, you can see after the breakout and it broke this previous high, I decided I wanted to get into this stock, okay? So, can anybody guess? Yes, I'm going to ask you guys a question. The first one that answers gets a cookie, an emoji cookie. Where do you think I set my stop loss at on this stock?
All day.
Who said that? B. Stewie? Did you say that, B. Stewie?
Yeah.
Darn tootin' you did. All right, you get a cookie. All right, thank you guys. Thanks for amusing me, B. Stewie. All right, so we're going to use the low of the day. And right here is the low of the day. So let me mark this out for you. This is where I got in, and here's the low of the day. What is the average daily range on Tesla? Let's bring up Tesla. Oh, I'm sorry, NVIDIA. Sorry, guys. NVIDIA. The average daily range is 4.21%, as you can see right up here in the top right of my screen. 4.21%. let's measure this and make sure we're within that range. So I grab from where I want to get in to where my stop loss is. 4.21%, I got in within a stop loss of 1.85%. That's really, really good. That is less than half, guys. That means if this thing works out for me, it's going to pay me handsomely. Okay? So I took 100 shares at 123.60, risking 121.29. So let's do the math. Does anybody yet feel comfortable with doing this on air with me? Does anybody here feel comfortable? I'm not going to put you on blast. I just want to see if we can get somebody else to do this. No? Last chance. Going once, going twice. All right. I'm going to do it one more time. This will be the last time, so make sure if you guys have any questions, you ask. This is very, very important that you know this. If I have to say, I would say aside even from a strategy, I would say this should be the absolute first thing that you understand in trading. The very first thing you should understand in trading is exactly what I'm going to show you right now, so pay attention. If my strategy is to get in after a trend break on volume, and I say I want to get in here, it doesn't matter what your strategy is, by the way. But if I decide I'm going to get into a stock, I need to know where my stop loss is. I know where I want to get in. I know where my stop loss is. Now I need to know how many shares I can take. Because if I know how many shares I can take, I know exactly how much I'm risking at this low. Let's figure out how much I risked on this trade. Let's clear this out. If where I got in was 123.58, we take 123.58 and we subtract the low of the day. The low of the day is 121.31. So we're subtracting 123.58 from 121, what was that? 121.31. Okay? So 123.58, the buy-in area, minusing the low of the day or my stop loss, 121.31, that gives us $2.27 a share. So if we multiply that by the 100, that equals $227 that I risked here. Now my risk, my 1% risk on my account in total, right now, if I look, it's $330. Okay, I can risk $330 on a $33,000 account. That's 1%. Okay, I took $227 because I still don't always risk my 1%. I still, knowing that we're in a market that's extended on the 10-day moving average, I still am not taking that full risk because I'm expecting some failed breakouts, okay? Now, same thing with Dell. I did not take full risk. It's got to be a 5-star setup, a grade A setup for me to take full risk. So I risked $227 on this stock. Now, not only that, but if you guys look, I decided to exit out after 1R. So if 1.82% is there, right here, a little less than 1R, but I exited half of my shares out and I paid myself right away. Okay? Actually, I'm sorry, guys. I actually took 200 shares here because I remember it went up immediately and I exited 100 shares. So I was actually risking a little over $400 on this. All right? Let me make sure that that's right. Yeah, $456-ish dollars. $454 actually. I was actually on the line with Covey and I accidentally fat fingered this. I was only supposed to take 100 shares. I actually took 200 shares of this. Okay? And I exited out 100 shares of this close to 1R because of my mistake. Okay? So I fat fingered this. And Covey, I remember he even said, "Oh, Dave, the typical fat finger," you know, because I always accidentally take too many shares or too little shares. Because
nothing like trading from the side of the road.
I know, yeah. You feel me. You feel me, Predator. You know, we've all been there. We've all been there. But I just want to be real with you guys because I'm asking myself, why would I take 50 shares out right here? That doesn't make any sense. I didn't. I actually took another 50 shares out somewhere over here. I think we can actually find it. Let me look at my monitor and see if I can't find NVIDIA 50 128 28 128 28 128 28 0.8. There. Okay, so right here, guys, is where I took another 50 shares off. Okay. There we go. So I took out half of those shares here because I fat fingered this. I had 100 shares more than I was willing to risk. Meaning, if this thing came back down, I was going to risk more than 1% of my account. And I didn't realize it until it was already up here. Once I realized my mistake, I exit out immediately because I want to manage my risk. Okay? Granted, it worked out for me. But I'm not going to go, oh, well, it's working out for me, I'm going to let it go. No. Hell no. I messed up. I knew I messed up. And you know what? The market paid me for my mess up. I'm not going to go, well, I'll just hold on to 200 shares. It's okay. No, hell no. That's not what I was willing to risk. So I exited out of half my position. Then when I made it up to 2R up here, this is 2R at 128.28 or close enough to it, that's when I took out half of my share size, okay? I like to pay myself at 2R. Now, if I think it's a big boomer and it's ripping fast and I see price action, I might allow it to go higher before I take half out. But I always like to pay myself because I'm trying to build my capital quick, okay? So I pay myself and then I always let that last half ride. And 9 times out of 10, I'm using the 10 or 21-day moving average to finish this off, okay? But right now, you just need to understand risk management. This isn't based on, your sell rules, okay? I just want you to understand my risk management. So let me restore these cells. And let me blow up this down here on the bottom so you guys can understand this now. So I got in here, I exited half here and half here. Okay, half of my half. Now, where is my next stop loss? If not all the way at break even, after I take shares out of the market, I always take my stop loss and I bring it up to break even. So after I pay myself, boom, I bring my stop loss up to break even. Why? Because I want to ensure that if I do stop out on this trade, that I've already made money in this trade. I cannot lose any money in this trade. I've made my money. I cannot lose on this trade anymore, okay? Then this continues higher. So now I'm playing a momentum-based trade, and I'm going to use this 10-day moving average. Now that the 10-day moving average is much higher than my stop loss or my break even, I'm going to use that 10-day moving average as my stop loss. Why do I like the 10-day moving average? Well, if we look at the inception of NVIDIA, you can see this 10-day moving average has proved to be a very good stop loss for NVIDIA. When it breaks that 10-day moving average, then it starts to break down, okay? Of course, from here, looking at it, I could use the 21-day moving average simply because that would give it more room, and right now, recently, it has been bouncing off that 21-day moving average. So there's multiple ways for you to follow your risk, and I could leave this at break even and let it have some more room here. I'm already out of half of this trade, so why not? Why not give it more room? Let NVIDIA, one of the best growth names in this stock, why not give it that room to continue higher? So that's what I'm going to do here. I'll allow it to come down and break below either break even or the 21-day moving average. So each day, the higher this goes, the higher the 21-day moving average goes. And once this stops below the 21-day moving average like this, that's where I will exit out. Okay? So risk management, it's very pinnacle. It's where we want to get in minus where we want to get out. Then you multiply that number by how many shares you're allowed to take using 1% of your account maximum. All right? Now, what's that, Dan Bob?
Can I make a couple comments?
Oh, I thought you asked if I went to college.
No, did you go to college? No.
No, hell no.
Let me say a couple quick things. One, I put a calculator that kind of simplifies this a little bit.
Sure.
In the water cooler chat.
Okay.
And that's what I use because I don't do maths. I like to be able to fill the blanks in and it calculates it for me.
Yeah, absolutely.
And the freedom that risk management brought me psychologically, because initially I would, let's say I'm buying a $10 stock and I could buy 100, well, I could buy 50 of them. So that's a $500 buy, right? But then the next time I want to do a buy, it ends up being like $1,200 because it's a $30 stock or whatever. Well, I would get terrified. I'm like, I'm getting ready to spend, $1,200. I'm like, seriously?
Right.
But then I had that aha moment where all I'm really risking always is, well, I started off lower, but today all I risk is $30. It doesn't
Absolutely.
matter if I lay out $1,200, $1,500, or $2. Well, not $2, but it doesn't matter how much I'm spending.
Absolutely.
All I'm ever risking is $30.
Absolutely.
So that really helped me psychologically to be able to buy and not worry about the cost as much.
Yeah, Dan Bob likes to use this here, ufins, ufins.com. You can punch in your account balance. Let's say we have an account balance of 3,300, 33,000, sorry, and I want to risk 1%. Our entry's at $10 and our stop loss is at $9, just to make it ever easier. We calculate it. You can take 300.
You can do the fee and slippage could go to zero.
What's that? Oh, the fee. Okay.
Fee and, do that zero.
Slippage, we'll say 0. Yeah,
unless you're doing huge.
We really don't need to. Yeah, we really don't need to worry about slippage. Why is the risk reward on here?
It depends what you want because it's telling you where to take profit.
Oh, it's actually telling you where to take profit on this. That's different. Okay, yeah.
So
well, we'll just do 2.
Okay, so that
but it shouldn't change your shares then, should it? Okay,
yeah.
No. Okay.
No,
that's good. I thought it was changing my shares because I would click this. All right, you don't have to worry about the risk reward on this though, guys. But you can go to ufins.com. I've created my own risk calculator. You got this one here where you can just type in the share amount, the capital risk, the total shares needed. I've also made my own. I don't think I really need to bring it up, but I will just to show you guys. It's not hard. I promise you. If I can do it, you guys can do this. It's not hard at all. Let me see if I can find it on here. Oh, here it is. So this is when my first data. I was taking a ton of data. You can see it's just a ton of data here. And I always would scroll over here, and then you can put in your max loss, your entry, your risk. It tells you how many shares and the dollar amount that you would take. Okay, it's that simple. And this is just simple math inside these boxes. So if you guys know how to do this, and guys, if you need more help with this, join our Discord. I know that the guys that I'm talking to right now, they're already in our Discord. But if you're watching this at a later time, join the Discord. We have a lot of guys that are profitable traders that had to learn this risk management too. And if you have questions, this is where you start. Risk management is where you start. Okay, so yeah, this is just pinnacle. It's pinnacle to trading. Yeah, this is one of the first things I learned. I was so happy to actually find. Unfortunately, I learned by day trading, but this is what kept me from blowing up my account so horribly. I still did some pretty stupid crap my first couple of years, 2, 3, 4 years of trading. But, I've came a long way, and mainly because of risk management saved my ass. Okay. So yeah, that is risk management in general. And we've talked about for about 50 minutes, guys. So I hope you got a general idea. Do you have any questions about risk management, or if you're lost completely, let me know too. Maybe I can help explain it in a different way. But what do you guys say? And if you, Dan Bob, if you'll unmute Ken Will just for a minute, if it's still loud, you can remute him for me.
Hey, Dave, I just want to say thanks for putting these videos out. I totally get what you're saying. I'm just trying to get my setup, man. As soon as I get my setup, I feel like I really got a handle on risk management and
dude,
what you're trying to say here.
Hell yeah.
I want to say thanks.
Dude,
definitely going to be watching this video for
watch it as many times as you want, dude. I'll get this posted right away. But no, honestly, thank you, man. You've been here since day one, man, and you're a huge reason why I do this, man. I love you. You're thirsty. You're thirsty as hell, and I love teaching. I love preaching this stuff because it saved me so much time when somebody else did this for me, and now I can do it for a crowd, and I can send it out there into the metaverse, if you will, or the internets, and let everybody else learn from it too. So I appreciate that, B2. Thank you. Appreciate you. Who else we got? We got Bray Investments in here. What's going on? Buff Wellington. What's going on, brother? Good to see you. Let's see. We already talked to Travel, Ken, Jimmy, B. Stewie, Awesome Art, Lee. Norm, what's going on, Norm? Haven't seen you in a couple days, brother. Good to see you, man. Good to see you. Stephanie, what's going on, Stephanie? Swervo, my boy Swervo. What's going on, Swerve? And Bob. We got a big crowd tonight. Listen, guys, if you have any questions, I'll leave it up in the air just for a few more minutes. If not, if there's anything you want me to go over, whether it's the S&P 500 or my thoughts, my trades, or I don't really have anything on the watch list. I haven't had time. I've really been busy today. But let me know. You guys have any questions? It's open mic.
What's platform do you guys use to trade on? Because I don't think I have stop loss on mine. I use public.
Okay. So we use the first one that I want to recommend to you is TraderView. Okay. If you want, you can download TraderView. Just use my link. You can find it in the open chat comment section. So you can go right here. You can click open chat and you'll see right here is the trading view. If you click on that, you can download that and that will have stop losses. You can set stop losses in there. It also has, you can set your brokerage. Right here it is. You can set your brokerage, like there's Webull, Alpaca. I don't know what you use, but you can set it up through here as well. You can also paper trade through this right here, so you can understand how to set stop losses on here. Personally, my broker is through Charles Schwab, which I use Thinkorswim. And what I do is I use this active trader, and I can set my stop loss by clicking this button over here on the side. Or you can click this button down here and set it all up through here. My personal recommendation is if you don't have TraderView or you don't have Thinkorswim, you need to learn how to do it. You're going to have to Google it because I've only used those two. But it's very, I'm telling you, you have to learn how to use this risk management. So if you've never used a stop loss, I really want I want this to be your homework, Ken. I want this to be your homework, and I want you to figure out how to do this. And if you can't, Ken, I would highly suggest you're done trading until you can. And that is the friendliest advice I can give because I think I'm saving you a lot of money by telling you that. Okay. Awesome Art. What's going on, girlie? You got something for me? No, you're just gonna have your husband singing into the mic or what? Oh, it's good to see you though. Any other questions? Ken, that was a really good question. Thank you for asking it. But I highly suggest you download using my link, of course. Using my link. Because honestly, guys, if you download using my link and you decide that you love this trading platform just as much as I do, if you decide to upgrade, which you don't have to, but the essential plan is only $15 a month, I get a kickback from that. Our crew gets a kickback from that. Okay, everybody that works hard on this channel gets a small kickback from that. And if you guys do want to support this channel, that's all you got to do. Pay for the charting system. Like I said, it's cheap. It's only like $15 a month. You get a ton of extra stuff with it, and we give you the watch list every month that you can download. You can see right here. If I click on this, this was the July watch list somewhere in here. The scans, and then you just bring it up and you go through all these scans. And it already has the relative strength rating. It already has the average daily range in here for you. So you're looking at the best stocks that are in the market. Okay, the best stocks that are in the market. And we highly recommend it. And every Saturday or Sunday, he gives you this watch list that all you have to do is download and add to this scan right here. You just import the list, and bada bing, bada boom, you have like 300 stocks to go through. And I do this every single time, guys. So keep that in mind. If you want to be a part of this, you're more than welcome to just use that link. What else do we have to go over? Anything else, guys? We got about 5 minutes. You guys have any questions?
I will say that if you get the TraderView Essential Plan, they try to sell you some extra exchange data. You do not need that.
Yeah, you don't need it. I do pay for it because I like to see like a lot of the different meme stocks that are going, like what is it, purple Pepe? I don't know, Purple Entertainment. No, what's one? What's one of the let's see, RPX, is that one of them? No, RXP. That's it. So RXP coin token. Yeah, the different tokens. This isn't it though. I hate it. I can't think of any cryptocurrency. Somebody help me. Doge, Doge, Dogecoin. Here's Dogecoin. Look at this. You know, there's Dogecoin for you. You don't have, like Bob was saying, you don't have to pay for the extra. I like having it just because obviously I do YouTube. So if somebody brings it up, you know, I can look at Forex and cryptocurrency. I can look at it all. It wasn't that much more to pay for it. I just wanted to, just because I'm obsessed and I absolutely love it. But yeah, you don't have to. It's cheap, guys. It's like $15 a month. And if you use my link, you get the first month for free. It's like I give you the $15 off the first month right off the get. But anyway, I don't mean to sit here and try and sell you on this, but it is definitely my favorite platform. So just check it out. Anything else we got to go over, guys? Anything else at all? NNE still trying to set up here. Carvana didn't work out for me today, but it's still within range. USM looks like it's really on the pinnacle of breaking off, but we did not get that volume in here. The volume did not come in for me to want to take this trade. MDGL did break out. I did not take this trade because the volume didn't come in when I wanted to take it, but it did work out. It did come in. Kava, we did get that breakout. I did end up making money on this trade. It broke out. I got out half at 1R, brought my stop up to break even. This is a good one to talk about, guys. Here, let me just bring this up on the 5-minute. So that way you guys can understand how this risk management works. All right, so check it out. So I get into this trade, risking the low of the day. So I'll put my stop out down here. Okay. Let me bring it up on my brokerage because I know that that's on there. Here's Kava. All right, so check it out, guys. This thing broke out on this day right here, okay? And I was using the low of the day. Actually, I was in it right here. I got in it here using this low of the day, all right? So my risk is 2.74, and where I took out half was 3.47. So a little over 1R. When this thing spiked up, I got out of half of my shares and brought my stop loss up to this break even. When it came back down, it stopped me out. I still end up making $200 on this trade because of my risk management. Okay, if I didn't know what my risk was and I didn't know where my 1R multiple was from where I was risking, I wouldn't have made money on this trade. This would have been a huge loser. But look at this, guys. I seen my trade set up. I seen the trend breakout right here. I get in my trade risking the low of the day. I'm in this trade for 1, 2, 3, and on the 4th day, it rips up here. It breaks the all-time highs. It makes new all-time highs. That is where a savvy investor is going to take out some of his shares, and that's exactly what I did there. I took out half of my shares, and I brought my stop loss all the way from down here at 91.61, and I brought it all the way up to my break-even price. So when it came right back down after I got out half my shares, it stopped me out for break even on that last half. And that is how I made money on this trade. That's why it is pinnacle to understand your risk management. Understand where your profit taking is supposed to be. If you're risking whatever your multiple is, that is considered 1R. If you're going to exit some of this trade and you know that the market is having these false breakouts, then get out half at 1R. If you know that the market's breakouts keep on running because you're paying attention, then get out at 3 or 4R or 2R, whatever you want. It's all up to you. Everything's discretional. I cannot press these buttons for you. This is all your trades and your ideas and your strategies. But,
David, can I ask you a question?
yeah, please.
How are you calculating the 1R? Are you doing it in your head with that formula, or is it is it somewhere in your chart?
Dude, no, that's a beautiful question. So 1R is your risk. So whatever your risk is. So let's say you have a $10,000 account. If you're risking 1% of your account, your 1R is $100. Do you understand that?
Yes, yeah.
Okay,
thanks.
cool. Yeah, no, it's really simple. So anytime I say 1R, that is going to be relative to your account. And that's why we talk in risk multiples here. That's a really good question. I'm glad you brought that up. So that's why we talk in risk multiples here, guys. If I say I'm risking 1R, 1R to me and 1R to you are two totally different things, but they mean the exact same thing compared to your account. So if I'm a millionaire and I'm risking 1R and you only have $1,000, but you're risking 1R, that is the same amount in relations to the size of your account. And this is how real traders talk. If you talk to any big trader, any Christian Quilamagi or any William O'Neill or any IBD investor, Oliver Kell, anybody that's been interviewed by Richard Moglen, they're going to talk in risk multiples or percentages. And that's what I want to talk about here, guys. I want you guys to talk in risk multiples or percentages. And it's okay if you don't understand it right away. It's okay. You'll hear me a lot of the times on YouTube saying, oh, I'm up $300 instead of saying I'm up 1% or I'm up 1R, because I'm an entertainer, right? I'm trying to entertain the fact that I'm up X amount of dollars, because that's what the people can understand. So that way I can lure them in like I have you and teach them the proper way of doing things, okay? So if you feel duped, congratulations. I just saved your ass. I'm just kidding. That sounds really like sadistic, I guess. No, but honestly, guys, the only way you can bring people in is by being flashy. Like, look at all these fake gurus that are out there. Like, yeah, you want to make $10,000 in a day and drive a Lambo like me? You know, that's what they're doing. They're showing you all these flashy things. So I say, yeah, I'm up $1,000 today on this. And they'll go, oh, wow, I want to learn how to do that. Well, guess what? It took me years and years and years of learning risk management, of learning how to play a strategy, how to do data testing and how to do back testing and do all this crap. And then here I am making this. And I still feel like 1,000 in a day is chump change because I want to be a millionaire, right? To be a millionaire, I need to slowly accumulate my account and my capital. So every 1R today is $330. 1R tomorrow might be $340 because my account moved up, right? Every week I reassess the situation. Every week my risk multiple might go up, okay? And if it does, hey, I'm happy. Ken Williams just turned into Colonel Sanders. I don't know if anybody else seen that, but I sure as hell did. Let me get some chicken, bro. But
yeah, I had to drive out to. I'm in the boonies, so I have to drive to KFC to get service.
Oh, do you? Oh, so you're at KFC right now to get service?
Yeah.
That's dedication, brother. I like to hear that. Well, thank you for doing that, man. Do we have any questions, guys? Do we have any questions about this? Or any questions on anything at all? No?
You know, when I first started,
Yeah.
my risk was only 0.25.
Yeah, I think that's
And
really
then
smart.
as I got more comfortable trading, it went up to 0.50, and now I'm up to 1.
Very cool.
So, you know, your risk multiple, you know, it's subjective. It can be that you're comfortable with.
William O'Neill actually would risk 7% on one trade. And he's one of the greatest investors alive. And he taught a lot of different investors. And a lot of those investors have a hard time stomaching that 7%. 7%'s a lot, guys. I don't know what kind of account you have. I don't care what it is. Figure out what that 7% is, right? So for me personally, you know, if I'm allowed to risk 330 and I multiply that by 7, that's $2,310 on one trade. I don't have the kahunas for that, guys. I don't. Especially if I take 2 trades a day, you know, and I could lose on both of those trades. Boom, my account goes down by $5,000 just like that. You know, well, I already know that my win to loss ratio is much greater. My loss ratio is much higher. So sure, it would work out. But if we do if we multiply this by 10, right? 330 and multiply this by 10, guess what? Oops. Multiply this by 10. No, I didn't do that right. Did I? 300. Okay, yeah, so that's no, what I meant to do, sorry guys, 330 multiplied that by 7. So that means I could lose $2,310 in one trade. Now, if I multiply that by 10 trades, because we always like to say we can lose 10 trades in a row, that's $23,000. I could subject myself to losing 10 trades in a row. I'd be down $23,000. I'd only have $10,000 left in my account. Okay? That's why we need to be careful here. That's why we need to understand those risk multiples. Because if you're going to risk 7%, you're only going to get 10 trades. You're only going to get, well, you know, in our case, we'd probably get more like 15, 20 trades before we blow up. I'm good on that. That's why I take 1%, because now I can take more trades and have a higher risk multiple, or have a higher R rating when I win, to earn more money in the long run. Okay? That's how you become rich. That's how you become a millionaire. That's, I mean, everybody that I've studied as well, guys, you know, Chris Quilamagi, William O'Neill, all those guys, they all use risk management. You need to use risk management too if you honestly plan on going anywhere with this. Any more questions, guys? Well, I hope everybody came out a little better understanding of risk management. We will be in the Discord all week. We're going to go live on Thursday, and we have some economic calendar. I think Friday we have some stuff coming out too. So be sure to stay tuned for all of that. Let's see, tomorrow, Fed Chair Powell testifies again? No,
we're done with that.
I was going to say it was supposed to be Tuesday, but we didn't actually get the actual meeting. Wednesday, we got it today. So core PCI is Thursday. So we don't have, I don't know, this is saying June 10th, though. Why is it saying June 10th, Fed Chair Powell testifies? They switched it from, tomorrow's Wednesday, right? Yeah, it's on this calendar. I don't know what the hell's going on. This
that happens.
Yeah, they must have, because we watched an old meeting on Monday, and then they switched it to today, apparently. So we might be going live tomorrow too, guys, if they're actually doing the meeting. I don't know. That's weird. That's weird. There might be another testify tomorrow, if there is, if he goes in front of the board again. Or maybe they just schedule it like that just in case they have to cancel one of the days. I don't know. I'll look more into that. But Thursday we have the core CPI and the CPI that's coming out year over year and month over month. You guys need to pay attention to that on Thursday at 8:30. That's going to be this is what they use to really look into inflation. So I'll just read it verbatim. Consumer price index. Let it load. Yeah, core consumer price index. So this is the core. This is the price in goods and services excluding food and energy. So this doesn't have food and energy. And then the CPI year over year and month over month will have both food and energy in them. And we want to see this reading come down. So right now where it's at, if it continues to stay where it's at or be within the forecast, that's fine. Okay. If we can get it lower than this, that would be really, really good. Okay. We want to see this come down because we want to see that inflation is coming down. Okay. It measures the changes in purchasing trends and inflation. Keyword right here. Okay. So CPI on Friday at 8:30, or I'm sorry, Thursday, July 11th. So pay attention to that, guys. And last but not least, thank you. Thank you guys so much for joining me. Letting me preach to you guys a little bit about risk management. If you guys have any questions, you know where I'm at. You're more than welcome to reach out to me in the general chat. Of course, if you're new to this channel, pay attention to what I'm going to say here. I will never reach out to you. I will never direct message you or send you a friend request. Ever. So if somebody is doing that, it is a scam. You need to report them and ban them or block them. Okay? I will never do that. I will never ask for your money. We got our own money here. We make our own money on the trading show. All right? If you ever want to support me, then download TraderView. Okay? Or ask for mentorship, you know, if you're wanting to do that. Of course, we don't sell any of that. But if that's something that you want to do to help support the channel, you're more than welcome to do that. I will never deny that. Okay, guys? But I do want to say thank you. Thank you for supporting me. Thank you guys for being here. We are up to, how many subscribers now, Dan Bob? 993? What the hell happened? Before we even started this show, oh, it's that YouTube short that we posted today, guys. That YouTube short. We're up to 993, guys. Let's go. Let's go, baby. Oh my gosh, 7 more. We only need 7 more subscribers, guys. 7 more subscribers. And that YouTube short I just posted is up to 3.6 thousand views. Holy hell, guys. Let's go. That's probably going to be one of my best shorts so far. So we're moving up, guys. So thank you guys so much for being here. Honestly, because if it wasn't for you, I wouldn't have a show. I wouldn't be doing this right now. Okay, so thank you guys. I appreciate you being here, and I hope you guys have an awesome night. We'll see you tomorrow morning. If I am not streaming live, I will at least be in the Discord watching market open. So I hope you guys have a good night. Peace.
Thank you. Thank you, sir. Appreciate you guys. See you, Muley.